Well, clearly the decrease in demand from China and other economies will soften the pressure on oil markets, and it must therefore make it much easier to maintain the balance that is now so important to all observers.
Although you represent the producers here, and the Kingdom of Saudi Arabia is offering another 2.5 million barrels a day onto the market by mid-May if it's needed. But the Minister Ali Al-Naimi of Saudi Arabia is suggesting that the demand is not there just yet. Is it necessary for Saudi Arabia to put more oil on the market?
What we had last week, the meeting of the International Energy Forum Ministerial, and what I can tell you is that in that meeting a spirit of cooperation prevailed among both producers and consumers, and there was a very constructive dialogue, and the message was very clear that there is a willingness to cooperate to make sure that enough energy supplies are available for anyone who needs them at this time or in the future.
You suggest that, but the market's not responding in kind to the offer here by Saudi Arabia. We still see Brent above $100, $120 a barrel, hovering around $124 a barrel. It doesn't seem like the market really believes that oil can come to market.
Well, I'm not so sure. The market is well supplied. The market is responding to a whole set of different factors. It's never just one factor that moves prices, but it is very reassuring that the suppliers are discussing with the consumers to make sure that their demand is met. In
fact, what are we pricing into this price that we see today? A temporary blockage of the Strait of Hormuz? Why is the market so jittery that it has Brent hovering above $120 a barrel?
Well, it is worthwhile to remember that the energy supply chain is long, and there are many factors that affect the process of price formation, and that has been one of the main concerns or the focus of the energy dialogue. Ministers want to know better what is behind the behavior of prices. We now have more interaction between physical and financial markets, but we also have more challenges along the supply chain in terms of the costs of inputs and of bringing these new supplies to market.
If violence broke out, it seems to me that you could actually cross the record of $147 a barrel that was reached in July 2008. In fact, are you suggesting that could potentially happen because the market is tight enough and the market and investors are nervous enough for that to happen?
By no means am I suggesting that or thinking about such a scenario. What I see is that right now diplomacy is running its course, that there's a lot of dialogue going on, a lot of cooperation. I was confirming that very clearly last week in the IEF Ministerial in Kuwait. We had there 76 country delegations from a total of 123 delegations that included also companies and international organizations, and everyone was talking about how to solve current and future energy challenges from a very responsible perspective and with a very constructive approach.
Well, you're suggesting that if Iran's exports were cut out of the market, some 2 million barrels a day, that there's plenty of crude around because this cooperation is at its nexus.
Indeed, there is sufficient capacity to meet the demand that is right now in the market and that will be increasing. The cooperation is of the nature that it has enabled both producers and consumers in the context of this dialogue to understand better each other's needs, to plan better for the future, to make better decisions. So right now there's enough space to be confident that the demand will be well served.